My name is Bernard, and you are watching African Dream Motivation. Without wasting much time, let's begin. From the 19th century through to the 20th century, the African economy has suffered major setbacks. The earliest form of setback was when most resources from the African continent were exported freely or at the lowest possible price to Europe and America. Minerals such as gold, diamond, bauxite, manganese, cobalt, and many others were taken out of the continent. This was a huge disadvantage to the growth of the African economy, but gradually, the black man stood up and fought for independence. As if that wasn't enough, political instability took the continent into another state of inconvenience. The struggles between the military and civilian government delayed Africa's progress economically. Getting to the end of the 20th century, most African countries saw the hope of true independence, political stability, and economic growth. Privatizations were widely promoted, and citizens began manning up and establishing businesses. The financial sector began growing and attracting investors, but on the negative side, con artists and fraudulent schemes marched into the continent to test the system and make quick and easy money in the financial sector. To further expand the African economy, most governments decided to make the barrier to entry into their financial industry and other related industries easy to attract foreign investors to drive the gross domestic product up. To really boost the production of goods and services in Africa, the banking sector needed to reach more people, but unfortunately, the commercial banks were not able to do that. Therefore, there was a gap between the ordinary African who had direct contact with production of goods and services and the commercial banks and other banks, mostly located in the cities. Legitimate microfinance companies were set up in various cities, towns, and villages. One of the main goals of most of these microfinance companies was to help provide basic banking services to the unbanked and underbanked people. The microfinance industry expanded at a faster rate. Gradually, people began seeing their colleagues recouping great returns from their savings, and investments enabled them to invest more in their businesses and grow financially. Loans were readily available, and it seemed like a safe haven for the finance of most people. As the years went by, profit margins given by investment companies became outrageous, and banks had to find a way and means to keep up the pace. This was a great loophole for something even worse to happen. These loopholes invited a lot of Ponzi schemes into the financial sector. The mysteries were yet to be unraveled, and many financial institutions which had even been established legally began going for the easy money. Africa was gradually being pushed to the wall without even knowing. Before we knew it, things were getting out of hand. Due to the flexible and easy barrier to entry, the industry became super competitive, with most financial institutions devising ways to beat the competition and stay relevant. This is where the twists and turns began. Banks and microfinance companies with little interest rate on investment began losing a lot of customers. The atmosphere was so vibrant for Ponzi schemes to easily set in and comfortably operate. The rise of Ponzi schemes. Ponzi schemes started about 2 centuries ago, and it was first recorded in the mid-19th century in Munich, Bavaria, Germany. Adele Spitzeder, who was an actress and a folk singer, switched from the entertainment industry to become a private banker in 1869. Her bank offered large returns on investments and fulfilled them by paying previous investors with money from new investors. She operated the scheme for almost a decade, and even though there were no direct regulations against such schemes in the late 1860s, she was however arrested and jailed in 1879. This was just the beginning of the creative minds in the Ponzi scheme space. Even though Adele's scheme is recognized as the earliest form of Ponzi schemes, the act of paying previous investors with funds from new investors became popular in the 1920s, when Charles Ponzi took it to a whole new level. He also operated in a totally different industry, demonstrating that Ponzi schemes are penned down by some of the world's creative minds. He executed the plan flawlessly, making his investment believe that he was actually paying their returns from profit he made in a kind of arbitrage, where he bought discounted postal reply coupons in other countries and redeemed them at face value in the United States. He promised clients a 50% profit within 45 days or 100% profit within 90 days. It is therefore not surprising that the whole fraudulent scheme was named after him. So briefly, this is how the whole idea of Ponzi schemes started and began spreading throughout the world, reaching Africa. After a few decades in the 21st century in Africa, the finance industry, comprising of the banks, microfinance and microcredit companies, as well as investment companies, faced a highly competitive industry. Many financial institutions joined the competition every now and then, and to really survive, they needed to find a way of setting themselves apart to win the hearts and minds of the ordinary African. One way customers decided on which financial institution to invest with was by considering the interest rate. A higher returns on investment was the goal. Therefore, those with higher interest on investment attracted many clients, making the competition very fierce. In some cases, it was practically impossible to deliver such high returns, but that wasn't the problem of the clients. So far as their investments were maximized, they were good to go. This is how the industry became infested, with thousands of companies operating as a Ponzi scheme under the veil of a legal financial institution. The wolves were already living among the sheep, and it was only a matter of time for them to start biting. After some time, the market was about to explode. More fraudulent schemes operating as microcredit companies folded up after earning so much from their clients. The life savings of people vanished into the thin air without a trace. It was so sad, but soon it became the order of the day, making millions of investments skeptical about keeping their monies with these financial institutions. The trust was slowly dwindling. Getting to the end of the first decade in the 21st century, central banks in Africa began investigating most of the financial institutions, and they were shocked by the result the investigation brought to light. Thousands of microfinance companies were operating in Africa without proper documentation, and in some cases, fraudulent financial schemes were running behind licensed companies. There were a lot of commercial banks and microcredit institutions that had drastic solvency problems, meaning they did not have enough equity capital to meet long-term debts. The findings were a big blow to central banks in Africa. Some of these institutions had been operational for decades. Others were fresh in the industry, and in all, millions of citizens had their life savings entrusted to these banks and microcredit institutions. It was a very sensitive situation. On one side, a public exposure could be made, but it will trigger panic withdrawals and render a few more financial institutions operating on the edge insolvent, leading to bankruptcy. On the other side, the fraudulent schemes were still ongoing, and more people were falling victims and trusting these illegal financial institutions, promising outrageous returns. The more time the authority wasted, the more people were lured into these schemes. most central banks in Africa took the bold step and began narrowing down on them. In Ghana, the central bank came out publicly with a list of financial institutions whose activities were either illegal or harmful to the industry. In 2016, the Bank of Ghana revoked the license of 70 microfinance institutions. The years following these revocations saw a thorough cleaning of the banking sector. This occurred in several parts of Africa, with countries like South Africa, Benin, and Kenya doing same. While most of these financial institutions were forced to close as a result of insolvency, there were still some who operated illegal Ponzi schemes, with evidence of some microfinance folding up and escaping with the savings and investment of citizens. This massive crackdown had adverse economic implications. Unemployment rate, which had already been high, increased. Some of these institutions had embezzled and misused the money, and recouping them became problematic, making it nearly impossible for some citizens to get their monies back. Tension rose up and people took to the street to demonstrate to cause the government to intervene in their quest to get their monies. The aftermath of this also created distrust in the finance sector, making people think twice before putting their monies in the bank or saving them with microfinance institutions. Before economies could recover completely from the financial recession, Ponzi schemes had taken other forms to feed on the vulnerability the recession had created. People were comfortable putting their monies in non-bank institutions for huge returns. Some went to the extent of ignoring warnings from central banks and kept investing in these pyramid and Ponzi schemes. In 2011, a Russian company called Mavrodi Mondial Moneybox, in short MMM, that had executed one of the biggest Ponzi schemes in the 1990s, began targeting Africa. It promised a monthly return of 30% on investment and managed to become operational in South Africa, Nigeria, Ghana, Zimbabwe, and Kenya. It functioned for years and it began failing. In South Africa, the National Consumer Commission identified the group as a Ponzi scheme, and eventually, the truth most people knew was strongly unveiled. As most Ponzi schemes do, MMM collapsed the moment new people desisted from joining the scheme. In Nigeria alone, over 2.4 million people have signed up as of the late 2016. It was so sad to see many investments go down the drain. But unfortunately, the harm was irreversible. Fighting these Ponzi schemes became a headache to many central banks in Africa. Most of them operated internationally and will quickly rebrand and present themselves as different companies. Sometimes too, before their fraudulent activities get to the authorities, millions of people may have already been hooked in. One big happening which had been the talk of Ghana for the past 3 years is the collapse of a company called MenzGold. The controversy about this company is mind-blowing. Nana Mensah is the founder of the company and has other businesses in key industries in Ghana. This is one person who was seen making donations here and there, investing in the country, and sponsoring many activities to support the development of Ghana. His relationship with top government officials and great business tycoons were outstanding. In 2018, the Ghana Football Association struggled to find a sponsor for the Ghana Premier League. After a long struggle, Nana Mensah, through his company Xylophone Cash, came to the rescue. Xylophone Cash signed a 5-year sponsorship deal with the Ghana Football Association, involving a deal worth $10 million. He was the hero of the day, and he was all over the news. He also owned an entertainment and media company known as Xylophone Music and Media Company Limited, which had the biggest record label in Ghana. This record label had two of the biggest artists in Africa, Shatta Wale and Stonebwoy, and other great musicians who had millions of fans. This made him a hero once again in the music industry. There was a little twist here. These artists with millions of followers promoted MenzGold in their music videos and other platforms. It can be confidently said that MenzGold had the biggest celebrity branding in Ghana, and it was very rewarding to the company. The company became extremely popular within the shortest possible time, and their customer base increased to the millions. Nam1 began making many donations, portraying the act of giving to society. Millions of Ghanaians began investing since the company was promising a monthly return of an average of 10% on investment, which was extremely high as compared to that of the banking industry. But its popularity and relations to highly reputable dignitaries in Ghana made its credibility unquestionable at a glance. As people began doubling their investments and marketing began reaching millions of people, the spotlight was on MenzGold. The Mineral Commission of Ghana realized that the company's license to trade in minerals had been abused and was now receiving investment just like the banks do. The Bank of Ghana issued warnings to the general public not to invest in MenzGold, but it turned on a deaf ear. The company continued to operate until they were forced to stop receiving new clients but pay returns on investment for old clients. This is where the problem began. The only way schemes like this are able to operate is by collecting money from new clients and using it to pay old clients. So if no new client is coming in, there will be not enough money to pay off old clients. This raised concerns and further investigation began. It was shocking to know that the company had been in business in the past, even before the name MenzGold came into existence. The initial name was Men's Bank with a K and was changed to Men's Bank with a C and finally changed to MenzGold. The name changes and rebrandings were as a result of the Bank of Ghana strictly forbidding a non-banking entity from using the name bank. So changing the name to MenzGold gave them the freedom to operate without the Bank of Ghana interfering much. After all, their license was with the Securities Exchange Commission as a gold buying company. MenzGold finally collapsed in 2018 and it was disastrous. People had their life savings with the company, including pensioners. Even before the collapse, MenzGold had established a branch in Takwa, which is the biggest mining city in Ghana. This establishment, coincidentally or strategically, met a redundancy exercise undertaken by Goldfield Company Limited, which is one of the biggest mining companies in the world. Compensation packages were in the millions, and with returns MenzGold was promising, it sounded like the perfect investment opportunity to stay out of work. Many people bought into the idea and invested all their money into it. There were people who quit their well-paid jobs to invest in MenzGold, and others took loans from banks to invest and benefit from the difference in the interest rates. In 2017, the Bank of Ghana served the company a letter calling them out to desist from receipt of money from customers and payment of dividend to its clients, since the company was not licensed to do that. This notice was rubbished by most of the customers who brought in millions of cedis. On September 18, 2018, the Securities Exchange Commission (SEC) stepped in to order the gold dealership company to stop accepting new investment from depositors. The moment new investment ceased, the scheme had reached a sloppy turn. The company collapsed, and this was a difficult moment for many people who wanted a piece of the cake. An economic breakdown and struggle followed. Many businesses collapsed after investing so much in MenzGold. There were some financial institutions who had deposited monies of their clients into MenzGold, and the collapse meant that all those institutions couldn't pay their clients too. This rendered most of these financial institutions insolvent, and they too were on the edge of survival. Some religious organizations were also victims of this nearly perfect scheme. Many people committed suicide and others found themselves in the toughest situations ever. Till today, people are angry, seeking the repayment of their investment, which doesn't look good. Whether the customers will get their monies back is still a mystery. One thing that makes recognizing a Ponzi scheme difficult is that it comes in so many forms, and it could operate for decades without it collapsing. On 11 December 2008, a billionaire in the United States of America called Madoff was arrested for practicing a Ponzi scheme. It was revealed that he had pulled off the biggest and longest Ponzi schemes, which lasted for 17 years. He was sentenced to 150 years in prison with felonies like money laundering, securities fraud, and several other charges. He died in prison in 2021. This means that a business could be a Ponzi scheme irrespective of how long it has been in the system. Today, even registered businesses with a reputable license could be a Ponzi scheme. No matter the industry, there is room for these fraudulent schemes to operate. The government may be fast or slow in stopping Ponzi schemes, but you can do your due diligence and avoid losing your investment in such a horrific way. There are always red flags whenever you take a close look at these business models. Almost all these Ponzi schemes promise high returns with little or no risk. This is a major red flag. In economics, the investment principle known as risk-return trade-off states that the potential return rises with an increase in risk. Therefore, risks are directly proportionate to returns on investment. In most cases, Ponzi schemes operate without proper registration of business. A company without a license means they are not properly regulated and can easily escape with your money without a trace. There are a few exceptions to this, since some Ponzi schemes have been able to go around the license issue. Some bribe their way in, while others get an industry-related license but operate differently. Some businesses begin as a legitimate entity but turns dark along the line. With this notwithstanding, a business without a proper license is risky to invest in. There are secretive and complex models that makes it difficult to understand what actually goes into the business. Just like Charles Ponzi's company, he claimed to be making money from postal stamps, but that was just a hoax. For years, investors never fully understood his business model. No mastermind of Ponzi scheme will tell anyone how it actually works. As Michael Zukov puts it, the purpose of a Ponzi scheme is to trick people to take the money and run. Another red flag is the desperation of companies to make clients roll over their capital and profit, promising even higher returns. Most often than not, the money invested is used for their personal gains and also to sponsor their lavish lifestyles. Therefore, when clients roll over, it gives them the time to get new customers to guarantee payments. Unnecessary delays in payment should also raise concerns about the reliability and legibility of the business. There are so many other red flags, but the baseline is that do your checks and save yourself from a preventable loss. The world is a global village now, and there is nothing new under the sun. You could always find a clue when you keep digging. African leaders must rise to protect the ordinary African from these fraudulent schemes. If we will learn nothing from how these schemes destroy nations, let's learn from the tragic event in Albania. Over 2,000 people died. The government was toppled, and it marked the biggest civil war in the modern history of the country, simply because Ponzi and pyramid schemes were promoted, licensed, and participated by government officials. It resulted in the loss of the hard-earned money of millions of citizens of Albania. Ever since, the European country had never been the same. History had taught us that from 1869, since the first Ponzi scheme was recorded, victims of these schemes had been broken to the extent that many people commit suicide. If you cannot fall a victim to this, your next door neighbor could be a victim. The poor widow struggling to survive could jump on a financial freedom scam to lose all she has. The unemployed university graduate still searching for a job after years of walking out the gates of the university could risk trying it out. Let's all be cautious and keep in mind that there is no shortcut to success. If you want to be among the top 1% in the world, you will have to go through life the hard way. Work like you've never done before and persevere. As Napoleon Hill puts it, the man who does more than he's paid for will soon be paid for more than he does. Have faith and never give up. Before you invest a dime in any business, make sure you are not funding a Ponzi scheme. Thanks for watching this video to the end. Let me know what you think in the comment section. If you are new here, don't forget to subscribe and click on the notification bell. Also, share this video with anyone you believe will love it as you did. Thanks again. See you in our next video. Until then, have a nice day.